This is the Nightly Business Report.
Good evening, everyone. The law of gravity hit Wall Street today and financial markets around the world, for that matter, as stock prices plunged even more than they did on Black Tuesday of 1929.
Lehman may post another $2.5 billion write-down on home loans in the third quarter.
Recession. A trigger to some as panic and fear, and to others, excitement and satisfaction. Many people say that recessions occur to make the spread between the poor and the wealthy further apart. The poor becomes poorer and the wealthy becomes wealthier. Most people choose to accept that fact even if they are from the poor end. But what if I told you anyone can change their lives overnight from a recession? From scarcity to millions. Let's take a look, shall we? Are you both disciplined in life and investing? Or maybe you haven't even started investing, but you bet you would be a great investor because of how fast you absorb information, learn, and adapt. Perhaps you have tried out currency trading, but never actually felt like you were earning any money. Although the profits are high, the losses are equally as high, if not higher. Or you might be a simple investor, humble, gentle, and just one that invests long-term for the greater future. Although life may not seem very interesting to you now, maybe even boring most times because of how frugal you are living. A night out with friends would seem like a waste of time and money. Dating would be more or less the same thing. Every day you are living is just a day living for a better tomorrow, like a stoic. But when is the reward going to pay off? Years? Decades? How do you change that? How do you be on neither side of the spectrum? How do you reduce the risk in investing in high-risk return stocks? How do you profit hundreds of thousands and maybe even millions from just holding a share for merely a few months? It is simple, actually. Simple enough to make a formula out of it. First, you have to understand that human minds are simple. Yes, our human minds are more complex than other mammals. But are we really that complex? Or do we just have a stronger, more intense sense of emotion compared to other mammals? The stock exchange, aka the market, is actually easy to understand. Its simplicity is so straightforward that our brains choose to complicate it rather than embrace it for what it truly is. Just a market. You buy your items at the value that you perceive it to be. The only difference is, in this market, you are not buying items to use. You are buying items to sell. What makes it so simple then, you ask? Well, when you buy something to sell, you will want to buy it at a low price and sell it at a higher price to earn the margins. But how do I value the items, you ask? How do I know if it is a low or high price when I buy it? Simple. Understand the product you are buying and whether it is a need to the general public, and buy at a price that you can afford to buy in quantity. That does not sound very simple, you say. Let me explain. It is hard to determine the consistent cause of recession, for each time it happens, it is due to an unexpected circumstance. If humans could expect it, then they can prevent it, but they can't. GDP stands for gross domestic profit, and that determines the financial health of a country. the value every product and service in the country contributes to the GDP, such as buying a new watch, getting a new car, or hiring a personal trainer at the gym. When GDP rises, it is a good sign. But when it drops for more than 6 months, then it is considered a recession. Let's dive into Rule 1. Pay close attention. It all starts here. Humans cannot time travel, therefore the market is random. As much as you are politically influenced, nobody can predict the market 100% of the time. That is because humans do not think rationally and instead emotionally 99% of the time. Predicting is one thing and execution is another. Fear is powerful, but so is greed. With these two emotions playing back and forth with 7.5 billion people in this planet Earth, it is enough to cause absolute randomness. In the book Fooled by Randomness, Nassim Taleb explains clearly on his approach to overcoming randomness of humans with simplicity and underthinking, not overthinking, underthinking. Therefore, that leaves us with rule number 1. Know that the market is random. Now that you understand how it works, let's dive in on what can be done. Saving money is boring. You feel like you're wasting time just keeping money in the bank for what? That 0.01% interest? Putting your money in the bank for most cases is considered foolish. However, there are other alternatives. What you need to do is put your money in a place where you can liquidate it at any time. What I mean by that is to keep your money where you can have easy access to, where you can just take your money out at any time without potentially losing any monetary value. If your money is heavily in stocks, when the market collapses, your money will collapse alongside with it. We do not want that, do we? Keeping your money in the bank, money market fund, fixed deposits, or any low-risk funds will allow you to take your money out during a recession without losing any value and accumulate your stocks at a cheap price. Now that you understand the market, well, let's dive in to rule number 2. Humans panic easily.
I should like to tell you that I have seen some of the experiments shown in this film. As you can imagine, technique is everything.
In the James Lang theory of emotion, psychologists William James and Carl Lang suggest that emotions occur as a result of physiological reactions to events. This theory suggests that seeing an external stimulus leads to a physiological reaction, and your emotion rises from how you interpret those physical reactions. Basically, what that means is how you react to certain events will be the cause of your emotional switch. This means that emotion is not controlling you. You control your emotions from your actions. However, most actions by humans are controlled by their emotions. Getting into bar fights, drunk driving, gambling in the casino. All these are emotion driven and is a threat to our existence. But why do we still do it? Humans forget to stop, pause, and evaluate circumstances from a rational and logical point of view. Just like how we view recessions and the stock market, what is right in front of you is so close that you can't seem to see it. The stock market will eventually crash every decade or so, because as long as there is a disaster worldwide, humans panic, causing panic selling and then causing the market to collapse. Now that you have followed the rules and accumulated your fair share of stocks during a recession at low prices, all you have to do now is wait. Wait and observe the beauty of human psychology revealing itself in a matter of time. The market might drop further. CNBC, Bloomberg might say that it is the worst recession yet, and it would probably get worse. Fear is everywhere. Don't worry, you are safe. That leaves us to rule number 3. Humans are forgetful. The market will always bounce back. Remember this in order to live a more mindful life and be one step ahead of your peers. Although recessions are traumatic, but are you really still able to feel the emotions you were feeling back then? Yes, you might have remembered those events, but it is not easy to feel the way you did. That is how human brains are wired. When a disaster, everyone panics. When they prosper, everyone forgets about the panic and starts rejoicing. The stock market always reaches an all-time high right after a recession. It is so predictable, yet nobody sees it coming. Nobody takes a step back and looks into the market from a bird's eye point of view. Well, now you know. Panic eventually fades, and when it does, optimism kicks back in, causing the stock market to bounce back every single time. While everyone had their fair share of enjoyment when the market was good, buying luxury cars, spending thousands on food, designer clothes, you, on the other hand, kept to yourself and saved money with discipline. Now, they are facing the fury of recession while you have just accumulated yourself a significant share of wealth waiting to unveil itself. After the fear, after the panic, when a hint of good news comes out, the market starts recovering. Your life will change forever. Enjoy, for your discipline and logical thinking paid off. There you go. Those are all the 3-part rules. Remember them, understand them, and you will prosper at any recession. Disconnect yourself from emotion and become a rational decision maker. Hold it right there. If you come this far into the video, I'd like to thank you so much because I really appreciate you for watching till the end of the video. If you love investment, finance, fitness, or practically doing every single thing, then keep yourself up to date. I do have a lot of exciting stuff planned out for you guys, so stay tuned. And if you have any advice, suggestions that you'd like to share, comment in the comment box down below and I try to reply to all of them. Have a wonderful day ahead of you and I'll see you guys next time.